We keep lurching from bad to worse. If you've been watching our show, and thankfully quite a lot of you have been, it's nice to see, you'll know that I'm not a fan of cryptocurrency just yet. I've never owned Bitcoin before, and I'm glad I haven't taken that stance. It's dropped by around 70% over the year, and it looks to be on life support. Now, there may be a place for crypto in our lives going forward, but with the collapse of FTX, the fourth largest crypto exchange, the time for that may have been pushed down the road a little bit. Not only has its latest collapse caused a lot of heartache and strain, but it's also given some new sharp teeth to the regulators. Reports of FTX's leverage of its $900 million into $9 billion are circulating with a bankruptcy filing late last week. Now, this has been called another Lehman moment, and with others channeling the late Charles Ponzi. My next guest surely has some insights into the money flows and players that were involved. Please welcome in Rebecca Walser to the show. I'm glad to be back. Glad to be talking to you, Rebecca, because I'm sure you've got some insight on this. But what are your thoughts here? Where does it leave us, and what's going on?
Well, all around, Scott, it's a mess because obviously people that didn't already take the plunge in crypto are now going to be like, wow, just like what you said, I dodged a bullet there. Other people that have already taken the plunge, I have some speculative fun play money in crypto. I've always told clients that until regulations are solidified, that this is going to be a speculative investment at best. So now we can see that this is being leveraged, Scott. I've heard a Monocom, even, Binance CEO, everyone coming out and saying we really need regulation. So this is moving towards regulation, which is sort of a cart before the horse, because the whole point of DeFi is decentralized finance. So when the government comes in and starts regulating, we've got big problems. But I would just like to just say very, very quickly that now that they have officially filed for bankruptcy, you've got federal law coming in here, and there's going to be an immediate stay, freeze on everything. And they do have the power to claw transactions back. At least they did have the power to claw back transactions that weren't on the blockchain. So this is going to be very interesting to see how we have a bankruptcy and federal law with all the stays that we get on a bankruptcy freeze actually affects the cryptocurrency blockchain market. So it's all new, it's all novel, and it's very, very interesting.
Yeah. So from my point of view, I just try to simple it down to the smallest detail. It just seems to me that, just like with Bernie Madoff or anybody else in that position, they got a little unlucky with the markets. I mean, the market came from 65,000 to say 16,000, right, in the Bitcoin. And so with those types of things happening out there, I think I said to Ashley, our producer this morning, I kind of felt like something might be brewing, because when everything crashed from the highs of the 60,000-ish to down to 20,000, did you notice that Bitcoin just basically flatlined? Like, everybody took their ball and left that market. They went home. I'm going to take my ball and I'm going to go home. And I thought to myself, if this sits around here for about 3-4 months, you could start to see some problems, because it's not going to be coming back the way folks thought it was, even though everything else around it was very, very volatile, right? And so it was just kind of laying there. And then lo and behold, something like this breaks. Is it just a bad market with some bad behavior kind of mixed in as well?
Well, I mean, Scott, we got to figure out what actually went wrong here, because they have this $600 million, though they had $900 million of liquidatable assets, and then they had $9 billion of liabilities, according to the balance sheet that I've read. And then what was suspicious, or what sent them over the edge, was this $600 million of nefarious transactions that they're saying that came in and drained down their accounts. But Scott, what actually happened? If you're an exchange, okay, so there's the problem here, because this guy was not only into an exchange, but he also had a research arm, he also had a hedge fund. So, when you're an exchange, if you're just holding and exchanging and that's all you're doing and there's nothing nefarious, there shouldn't be issues. But what's happening is, it looks like, and I don't want to speak because I don't have the facts in front of me, and I'm a lawyer, I like to use facts, but it appears at first glance of this case that money was taken from customer deposits to actually leverage into other divisions or other companies entirely. And that is a Ponzi scheme. You're 1,000% right. You can't take investors' money and use it for your own purposes. That is illegal. That is fraudulent, and that is embezzlement, and is all kinds of other criminal things. So this is a big problem. The Ukraine interaction into this story is definitely going to be looked at very closely, because, to map this out so people can kind of see the big picture, Scott, you've got the United States federal government, Congress, and the president sending money to Ukraine for the Ukraine situation. Ukraine as a country then investing in to the FTX,
right.
and then unfortunately the CEO was one of the largest donors in this last election cycle to the Democratic base, which I don't really care what side you donate to. The point is that FTX itself was quite involved in donations to this last election. So if you were looking at this with a transparency lens, you'd say, well, this looks like the U.S. government sent money to the Ukraine, which then invested into this exchange, which then turned around and gave money back to the Democrats. And that's very alarming, actually, and quite upsetting. It needs to definitely be looked at, because any kind of foreign interference with our elections on either side has just got to be completely fraudulent, and it's got to be dealt with. So we have got so many issues wrapped into this one case. This could be the tip of the iceberg, Scott, and it's a really big tip.
Right. I think you're exactly right. And one of the other things I thought was a big tell was the fact that they own another. I mean, there's some 130 some odd entities involved there. They were spread far and wide, but one of them was a market maker for the exchange.
Exactly.
So they actually were a market maker on their own exchange, which I've been around a little while, and that doesn't smell very good if you ask me. So we don't like that kind of stuff. But yeah. We're going to find out a lot more in the coming days. Really appreciate your take. That was very, very good. Thank you very much. Everybody loves you. Rebecca Walser. She comes to us from Tampa, Florida.